Welcome to Chart of the Day. I'm Robert Folsom. Trade wars. Bad news predicts a rising market. Let's talk about two important stock indexes, both located in mainland China. The Shanghai Composite Index is a broad index of Chinese stocks, while the Shanghai Financials Index lists stocks in China's financial sector. As you can see, the patterns are similar in these indexes, yet sometimes they will diverge. And that's when it's wise to look closely for an indicator of what will come next. For example, the Financials Index saw a low in June. From there, prices remained above that low, indicating that the trend had turned higher. Meanwhile, the Composite Index also saw a June low, only to see prices carry to a lower low. And this was the divergence. Yet, because the Financials Index trend had turned upward, it was the leading indicator, which signaled that the Composite Index would soon follow. That is why Global Market Perspectives Asia Markets editor Mark Galashevsky showed these charts on August 31st. His forecast said, quote, "The divergence should eventually support a rally in Chinese shares," end quote. That was the September Global Market Perspective, which published August 31st. And in the month that followed, the Composite Index saw one more wave down, then price did indeed begin a rally. With all that said, now let's consider the especially intriguing context of events in China that were unfolding at this time. Namely, a series of bad news stories that erupted regarding $250 billion in tariffs imposed on China by the United States. Now, $250 billion didn't happen all at once. The tariffs were imposed in 3 stages, and visually, the details speak for themselves. $34 billion took effect on July 6th, $16 billion on August 23rd, and $200 billion on September 24th. As I said, bad news stories can be intriguing because they so often serve as a contrary indicator for what's next in stock markets. In the just published October issue of Global Market Perspective, Mark Galashevsky put it this way, quote, "Because bad news often erupts after stocks have declined for some time, often near lows, outbreaks of bad news can sometimes serve as buy signals. The United States' imposition of tariffs on $250 billion worth of imports from China over recent months may have provided just such a signal." The more important indicator, of course, came not from the news, but from the divergence that Mark Galashevsky spotted on the market charts themselves. You can see the fully labeled version of these charts for yourself in the October Global Market Perspective. Please see below for more.